Okay. Many thanks, Philippe and Christophe, for your participation in this panel. Maybe as an introduction, could you please introduce your fund in case your global audience may not know you as well, and an overview of your two respective investments in TV and GB Rail Freight? Maybe Philippe, you can start.
Sure. Hi, it's Philippe Iley. I'm a partner at Global Infrastructure Partners. We're a global fund focusing on transport and energy infrastructure. I work on the transport side. Within the transport sectors, we look at rail, airports and ports. Our two rail assets are Italo, which is the high-speed train operator in Italy, and also Pacific National, which is the freight rail business in Australia.
Christophe?
Yeah, so I'm Christophe Bordes, so managing director at Infracapital. So Infracapital was founded around 20 years ago, and we're currently managing 2.5 billion pounds of infrastructure investments. We have around 20 companies in our portfolio and are present in many infrastructure areas such as telecommunication with optic fiber, renewable energies, energy infrastructure, waste and water transport infrastructures. So we have a strong focus on energy transition and investment with a positive impact on environment. So we can do both brownfield and greenfield investments because we have two different investment pockets, meaning that we are ready to take construction and development risk here, even so as long as it is in the infrastructure space. And our positioning here is a mid-market positioning, investing between 100 to 400 million of equity per transaction. And so we've acquired GB Rail Freight, so this rolling stock and locomotives leasing company in September last year, so exactly a year ago.
Okay. You have invested in two different segments, passenger rail and for GIP and freight for Infracapital. Can you explain how COVID-19 have impacted your respective investment up to now, and how you see the effect going forward in the short and medium term? Philippe?
Yeah, sure. Look, on the passenger business on Italo, you're obviously dealing with a very high-touch, passenger-focused business. So like all of the passenger transport sectors across Europe, the impact from COVID has been quite significant. In terms of right at the height of the crisis, back in February and March in Italy, we reduced services from around about 100 to 110 a day down to 2. We ran at sort of 2 to 5 for most of March and April. Since then, we've been recovering our services and putting back on seat capacity as the demand and the lockdown restrictions have slowly been lifted. The biggest constraint at the moment is the social distancing on the trains, which is different to planes for those who don't know. So we're only allowed to sell half of our seats at the moment. So because of that, our volumes are very restricted, even though our load factors are still good. So our volumes have probably recovered to about 35 to 40% of where they were, and that's only selling half of our seats. So you can see that the load factors on what we can sell is pretty good, but we're obviously a long way down from where we were in 2019. The thing about Italo, obviously, being an open access operator, is we decide on the seat capacity, we decide on the peak and the off-peak demand. We're not running a concession business where we have to run a fixed schedule. So it was very flexible on the way down back in February and March when we were reducing. and it's very flexible at the moment as we're putting seats and trains back into capacity, albeit with that that seat spacing restriction.
New Christophe, or Jibel reflect on the impact of the COVID-19?
Yeah, so thank you for this. So obviously, intermodal transport has been impacted given the lower volume transiting. Initially from China, but also lately from Latin America. So these are different matters from the passenger transport, but the overall container volume has reduced. So intermodal, needless to say that it has been impacted. Recovery is quick, however, because more and more containers are arriving in the UK. So therefore, we are quite optimistic for the coming months. We'll be in a better position, I would say, early 2021 to assess how the catch-up was affected, but there is so far, a real catch-up. On the aggregates part, it has been less impacted than what we thought, because the building works rapidly restarted, actually. So it stopped only for a very short period of time. So this part of the activity is recovering pretty well. And then on the macro, you have obviously some good news, such as the political decision around HS2, which obviously will have a positive impact in the medium term, given the position of GBRF, and it should bring obviously additional volumes that will come from this project in terms of delivering goods to make sure the building works of HS2 are up and running in a timely manner. So the underlying macro trend is very positive.
Yeah, very good, very good. So you are two pioneer in the infra investor in the rail operator segment. Perhaps you could explain the key infra characteristics of those businesses, Christophe?
Sure. So as far, having a fleet of more than 160 locomotives and 1,500 wagons with existing long-term contract is obviously not something you can build overnight, as you may guess. So maintaining this present and a state-of-the-art fleet with a significant number, so apologies to be a bit technical, but with class 66 and class 73/9 locomotives provide a competitive advantage, because they obviously there is some scarcity on the market, and customers benefit from the most efficient machines that are being provided to them. Then the rail transport is about long-term planning. So HS2 is a good example, as it took decades to launch, and it is going to take another 10 years to build. Therefore, once all required facilities are planned and put in place, a natural barrier to entry existed and is creating an infrastructure profile. Furthermore, the diversity of activities, because I mentioned earlier, aggregates and intermodal, but the reality is that you have diverse activities underlying contributes to the key infrastructure features. So you have a stability of revenue over the long term, because it's due to the infrequency of the churn contract because of this diversity of activities. Every activity is rather specific, and you then create a barrier to entry given the critical size to be reached, as I mentioned earlier. So then the market itself is organized around three main players, so with quite significant market shares, and they all have built significant portfolio of activity over time in a growing market. The level of competition between the big players and required size make it very difficult to enter the market, because we are already competing quite heavily with them. So for new entrants to find some room seems rather challenging. And additionally, the pressure from the decarbonization agenda works in favor of rail freight infrastructure, as the move from road to rail saves significant amount of CO2. As an example, an average freight train moves the equivalent of, depending on the percentage of usage, but bulge brackets, 40 to 70 HGV loads, while it only emits 25% of the in terms of carbon equivalent emissions as road transport. So as such, rail freight demonstrates a clear contribution to the challenge of meeting UK's net zero carbon target, which brings an additional positive sector dynamic and shows how the infrastructure in place is key going forward.
And Philip, how about NTV?
Yeah, sure. Look, obviously, lots of our competitors and infra funds have bought leasing businesses, track businesses, staging businesses.
Yeah.
We've bought two operating businesses, one passenger and one freight. So we just own the rolling stock, and we do own the rolling stock. We don't lease it. So I think in Australia, Pacific National is about 500-600 locos and about 11,000 wagons. Italo between about 40-45 high-speed trains. So why did we like them? Why did we do those deals? I think we wanted to make sure, first of all, that these were essential services and they were the best mode of transport. And clearly, if you look in Australia, freight rail beats trucking because of the distances by some margin. So in terms of cost per mile, it's always going to win. And given the economics in Australia in terms of they dig their raw materials out of the ground, they put them on a train, they ship them off to India and China, that's a great bit of the global trade network where the rail is going to be an essential piece of it. That was the attraction there. In Italy, the beauty of Italy is it's very long and it's very thin, so the distances between cities are quite significant. There's a lot of cities in Italy that are 200 to 400 kilometers apart, which is the perfect distance for high-speed trains. So, we had to take a view, is high-speed trains going to be a better product than either toll roads or aviation? And clearly, the modal shift from those two sectors before we owned it and since we'd owned it continue to be very compelling, because it's the best way to move around of that sort of amount of distances. We're not a commuter rail business, we're an intercity rail business. I think given the size that both of the businesses had built up before we bought them, the barriers to entry were very, very significant. But we don't own the track, so we get the risks, the revenue risk is a little higher in the operating business. So we had to be certain about those long-term favourable trends, and I think there's a lot of good tailwinds behind the rail sector. Modal share, growing share, ESG pressures, and we're also looking. We have quite high return thresholds at GIP, which probably wouldn't be suited from buying leasing businesses or rail track businesses. So we recognise that we need to take on a little bit more of that revenue risk, but hopefully with operational value added, there's the potential to achieve a slightly higher sort of risk-adjusted return.
Okay. Still, Philip, we're still discussing about that. There have been a very slow start on competition between high-speed rail operator in Europe, and it's increasing a bit, like the recent announcement by SNCF to operate high-speed train in Spain, or a Spanish operator to operate train in France. Are there any plans for NTV to operate services outside Italy? And
I think we'd like to. It probably wasn't part of our underwriting in our investment case. So if it does come along, it would be very additive to our returns. We have looked, particularly in Spain where they ran a process. We didn't like the process that they had designed. They were calling it open access. It just looked like a concessioning model to us in terms of the authorities and the track owner tell you the slots and the times and the routes that you must do. The beauty about Italo and COVID has helped prove that is an open access operator should be allowed to do what it wants if there is space on the track. So that's the benefit of of that particular business model, and it's shown on the downside when we needed to reduce. It showed how nimble we can be when we needed to put the capacity back. As soon as somebody wants to tell us what we can do, be that the track provider or be that a slot allocator, then all of a sudden the attractions of the model begin to diminish quite rapidly. And if you don't get the fuller protections of a concession model, if you get a true concession, you obviously have protections in terms of market protections in a particular region. The Spanish model looked to be the worst elements of both, where they were telling you what to do, but they weren't giving you any protections over any particular geographies like you'd usually see in a concession. So never say never. We would like to do it, but we'd like to do it where the government sees the benefit from open access competition against the state incumbent. Where we see the French taking old rolling stock and throwing it into Spain, and then the Spanish retaliate and take some of their old rolling stock and throw it into France. Where's the consumer benefit of that? The one tricky thing from just piling in, or the two tricky things probably from just piling in across the border, obviously first is technological differences. We cannot just take our trains across the border into France or into Austria. They just won't work, but they won't work in the other direction. So we don't have harmonized systems across Europe. They're trying to get harmonized systems, but we don't have them. And the second is the lead time for good rolling stock. We don't want to do it with an old inferior product. One of the reasons Italo's been successful is its trains are brand new, very efficient, very fast, and very reliable, and therefore cheap to run. And we'd like to replicate that model, but getting hold of brand new high-speed trains takes 2 to 3 years. So it's really tricky to form a beachhead when you can't start your service for 2 to 3 years after having your discussions, and then the incumbent state-owned operator can see you coming and can plan accordingly.
Yeah. Christophe, you have invested in GB Rail Freight as we do you intend to expand your rail investment in continental Europe with all the support that the EU and member states are providing to the shift to rail?
Thank you for this question. So I think Philippe has rightfully illustrated that competition in Europe is fierce and international. So I would say the priority probably is to consolidate the existing platform and benefit from opportunities in the regional markets, such as HS2, as I mentioned earlier. The share of rail freight in intermodal transport is due to increase significantly in the coming years as modal shift from road road to rail is occurring. So as a consequence, we see a lot of opportunities in the UK currently. So having said that, we could, however, look at some development in an opportunistic manner. But we have this size, and there are a number of things that we think we can capture in United Kingdom so far.
Okay. So right at the heart of the EU Green Deal, targeting the reduction of greenhouse gas emission by at least 55% by 2030. How is the green component taken into account in your companies? Perhaps, Philippe, can you explain also your perception of green financing, as you have put in place a green loan last year with Natixis act as a green coordinator?
Yeah, sure. Obviously, the carbon footprint of an all-electric train operator with a brand new fleet is probably as good as it can get in the class. So to give you an idea, they're probably 20 to 30% cleaner in terms of emissions per seat than the rolling stock that was around in Italy at the time. They're probably 70% cleaner than cars, and they're something like 90% cleaner than the equivalent of taking a flight from Rome to Milan. So the overall credentials for the company are very strong. In terms of that green financing that you participated in the back end of last year, I think it's that 1.1 billion euro green loan. It's probably one of the largest green loans in the transport sector. There's been a lot in the renewables, but to get one done in the transport sector, we're obviously quite proud of. Clearly, the eligibility of the funds need to go to something that is deemed suitable, and the purchase of these trains, and these trains were already getting energy efficiency certificates from the Italian government because of their various emission standards. So we had a very good use of proceeds, and then in terms of are there any economic benefits to us? It clearly opens up another distribution pool. Clearly there's banks and there's credit investors out there that want to get access to green products. So we're very pleased to supply them with 1.1 billion of green loan. There is a margin benefit to us. There's a small margin decrease in the pricing if we hit some ESG KPIs. Those KPIs are around things like emissions per pax, employee training, customer satisfaction, and of those sort of big three KPIs, we're talking about sort of 5 to 10 basis point benefit on the pricing. So I think there is we're beginning to see some economic benefit in terms of distribution, new investor demand and pricing over the good corporate governance principles of the business model and how you go after managing your capital structure.
Christophe, given as you mentioned the model shift in the UK, do you, as Infracapital, looking at green financing on broader ESG agenda in the UK?
So, I mean, there is a general trend to move transport off-road onto rail. So it's a major decision-making point for our investment in GVRF. So really, the key driver of us investing in this was really to follow that trend, which will have in the end a positive impact on overall greenhouse gas emission. So GVRF various operations also positively impact environment by significantly reducing the number of trucks for transport on various asset classes, as I said before. In addition, we have the opportunity because the British rail network has its specificities in terms of electrification. So we have the opportunity for bi-mode locomotive, and it's becoming clearer. So we have locomotives running diesel as well as in an electric mode, so that they can do different things than just sticking to non-electrified electrified networks or non-electrified networks. So we are trying to diversify the portfolio. When it comes to ESG, so it's at very heart of our investment thesis. We do review carefully before making any investment decisions. Investing in businesses who are meeting our environmental, social, and governance standards is essential for us. It is a strong commitment to our LPs. So that's something we've committed to. So each potential investment has an ESG score, and we analyze it through 9 different parameters always. So and without a decent score, we decide usually to pass on certain investments because they simply do not reach the standards we think we need to have. So obviously, analyzing this criteria is of the utmost importance, because you may have one picture today, but as you're aware, we are infrastructure investments, so we usually are investing for the long term. So it's very important to have a long-term view and to really understand about what is the underlying sector dynamic and how is this investment going to behave in what would be the new ESG standards in 2030 or 2035.
Okay. Maybe a last question. There was a protest yesterday by independent rail operator in Berlin about the subsidies that Deutsche Bahn is receiving by the German state. Do you think that kind of subsidy is a threat to the level playing field in Europe and on freight or passenger? Does anyone want to cover that?
It's a delicate topic. Look, on the passenger side, it would be nice if there were more private operators rather than so many state-owned operators. In terms of how they get funded and how that funding goes to the track versus the operations and the interchange in terms of the track access fee, it's not as transparent and as fair as we would like in most countries. To be fair on Italy, it has changed over time and it's got to a place that we are pretty comfortable with. There were some very significant changes back in 2015, for example. I think in Germany, the structure of the track access fee is very well suited to the rolling stock that Deutsche Bahn has, and not very suited to the rolling stock of the current small competitors or any new competitors, and that's very challenging. Lots of people have trudged off to Brussels to complain. It takes a long, long time to win your battles. This sector is decades behind other transport sectors across Europe in terms of liberalisation and commercialisation. But the progress is slow, but it's all in the favour of the private operator.
Yeah, I would say I've got, given the sensitivity of the topic, Phil, indeed have little to add. On the freight part, it's obviously more open than what it is on the passenger side. Definitely, you've got more competition and more operators that are actually providing freight services. That is for sure. But then we obviously need to be cautious around this, because the reality is many names are actually subsidiaries of incumbents. So it's not because they have different names, and I'm not giving any names, please. But the reality, they are just subsidiaries, right? So it's opening up. I think so. Given the fact that there is probably less brand sensitivity than what is the case for passenger transport, it's also more open and a little bit quicker than what it is than for passenger transport. Because typically I would tend to think that for a French person not taking a train, which is SNCF, would be breaking this paradigm to an extent which is hard to anticipate, but it is going to happen eventually, but extremely challenging. You see, when we see how complex it is for passenger trains to obtain slots into the French rail system. I think it is going to take some time, some more time.
There is still some progress then. Thanks a lot, Christophe. And no, you want to add something, Christophe?
No.
Okay. So thanks a lot, Christophe and Phil, for this. And I hope the audience will like our discussion. Thank you.
Thanks, Julien.